I'm Dominic Rubino. Welcome to the Cabinet Maker Profit System podcast. And you want to talk about specific? Today couldn't get any more specific, especially if you are an architectural mill worker. My guest today is Matthew Snowden. He is a bonding expert. And today we're going to be talking about mill workers, all about surety bonds for architectural millwork jobs. Where else are you really going to find that kind of cool info except right here? So I'm very proud to bring you Matthew and his insights. All he does is surety bonds. And specifically, we're going to talk today about construction bonding, but more importantly, how to bid with the most impact when bonds are included in the job. If you've never done those before, or if you're looking for ways to leverage bonding in your jobs, and how to win bonded jobs. So a lot of insight coming today that you probably don't get a chance to find out about because it's transactional. You call the guy, he gives you the info or he doesn't. But this is going to give you an inside scoop on how people are doing it properly. So if you're in the architecture millwork space and you are moving up in the market and you need to do bonded jobs, this is the meat and the potatoes and the plate and the knife and the fork. I know you're going to love it. We'll see you on the inside. Mr. Matt Snowden, how are you?
Good, Dom. It's great to be here with you. Thanks for having me on today.
Yeah, I'm excited to be here because only a few people are going to care what we're talking about, but those people are going to care a lot.
Those are our people.
Those are our people. Yeah, that's how we talk about them. They're our people. Yeah. You're a Phoenix. How is it in Phoenix right now?
Well, I don't want to gloat. We live all year long
I know.
and pay for this weather right now. It's a nice, sunny 65. I was able to get a hike in this morning. I'm sure
Did you do A Mountain? Is that where you hiked?
I did North Mountain. I live in Phoenix.
Oh, okay.
A Mountain is I went to Arizona State, so very fond of A Mountain, but
Yeah.
This was a North Mountain day.
Oh, okay. I know that I heard on the news that you guys have a cloud warning. There might be a cloud in the sky today. So people are running for shelter.
I bundled up just in case. I got really nervous.
Hey, Matt, people may not know who you are. So do you mind if I ask you this very abrupt question?
Go for it.
Mr. Matt Snowden, who the heck are you? And how is it you come to be speaking to all these forward-facing cabinet makers and mill workers all over the world?
Well, first of all, I'm humble and honored to be here and to have the opportunity. I grew up in Appalachia. I was the product of a small town and found my way to Arizona State, where I studied finance and spent my career in financial services, got into the insurance business on purpose, where I actually found a niche within a niche called surety bonds, which is what we're going to talk about today. Yeah. And so with surety bonds, I actually built an agency and I sold it to one of the largest firms in the country. And I now run the surety department for the Mahoney group based here in Arizona, but we work nationally and even internationally.
Right.
And so my mom has told me since the day I was born that I'm the best. And my wife generally agrees with her. And so I'm just going to say, I am honored to be here and for some people around me to say I'm the best.
You're the best. That's good. That's a good start. It's a good start. Now, if I recall from our pre-interview, because you and I had a little warm up here to figure out the title and how it would appeal to our audience and add value, you've also sold a business in the past too. Is that correct?
I have. So I had the distinct pleasure of leaving one of the largest banks in the world, where I had a really interesting and fairly cushy role. And I made this crazy decision to get into insurance. I had the pleasure of being there for 13 months and getting fired. And so I started my own firm while I had a wife that was pregnant and a couple of dogs and just a crazy life. And I guess I'm a glutton for punishment, but I had the distinct honor of building that thing to the point that some friends that ran one of the largest firms in the country asked if they could acquire what I had built and fold me into their operation to lead the surety practice going forward. And it was a great opportunity for my family and I. And I've lived, when I talk about signing personal guarantees and making decisions that really affect your family and making payroll out of personal checks, I can promise you I have lived it.
Yeah.
And I have taken it home to my wife, and I understand the pressures that come and actually the freedom that comes post sale. And in my case, getting to stick around for a long time and be a shareholder in the go forward organization as well.
Yeah. Well, thank you for sharing that. I appreciate that because, everybody listening here is an owner.
Yep.
And I think it's important that we are talking to other business people who get it. You know, I don't like talking to gray people in gray suits doing gray work, you know, but if you've been there and done that, even though it's in another market or trade, you know, another specialty, you understand what business owners are going through.
When you've signed the front of the check, it means something different.
It does, right? Yeah. So let's talk about surety bonds. And the reason I went and found you, because we had to go find you. You're not an easy to find guy. There's not a lot of surety bond, is there?
We're this weird niche within a niche that nobody understands. So in a way, I just cackle at the idea that yes, we are oddly hard to find for such a necessary piece of the construction economy.
But it comes I'll tell you, maybe this might help you. As a result of the conversations I have with my coaching team, we're working with lots of different contractors out there, lots of cabinet makers and millworkers. And with the bigger ones, or the ones that we're moving, you know, they usually start with us when they're X, whatever their revenue is, and we move them up to X to 3 to 4 to 10, right? So they're getting bigger, and they're starting to work on the kind of jobs where bonding is required. And so who do they ask but their business coach? And not that we necessarily will refer you, because that's not within our scope, but we need to understand, when you guys go to your conference, what's the pecking order in your room? Right? Exactly. So you're smiling. Exactly. Yeah. And so my job here is to inform, educate, and inspire our audience. And I think today it's going to be a lot of educating, or edumacation, and inspiration. So let me put it in your hands. Explain the market as you understand it, as cabinet makers and millworkers would need it, and help us understand how we can use it to grow our businesses.
Absolutely. I'd be honored to. Thank you. So first of all, bonds are not insurance. They are a guarantee, and we're going to talk specifically about payment and performance bonds, which are the staple product in the insurance or in the construction business. So it's a guarantee that you will deliver the job on time, on budget, per the plans and specs, and pay everybody that was involved. That guarantee, if it were to ever be called upon, is typically personally guaranteed by the owners and their families of that company. That's right. And so one of the most important things to understand is you actually have to qualify for this. You can't just pay enough money to shift the risk to the insurance company. You're actually committed to this outcome, and you're paying for the protection of your client. It is not for your protection. And it's an insurance company on the bond. Typically, it is sold by an insurance agent, but it is not an insurance policy.
That's interesting. It's sold by an insurance agent, but it's there actually to protect the customer, not the provider.
My customer's customer.
Yeah.
Yeah. And, you know, how do we use it to grow our business? Well, for starters, in most cases, your client or your audience would receive a Millworks scope, and they may have a stipulation from the general contractor or the project owner that says, I need a payment and a performance bond, or I need a bid bond, which predates typically the payment performance bond,
right?
That assures me that there is someone that will guarantee that you are going to do what you said you would do. On federally funded projects, there's the Miller Act, which stipulates that projects purchased with federal dollars over a certain size have the benefits and the protections of a performance bond and a payment bond. And so if they're a prime contractor, they may be seeking work owned by a public entity or a large corporate entity that wants that protection and will pay for it, because these are often a pass-through cost. The person calling for the bond understands they have to pay for it. And so that cost of the bond is contemplated in the bid package. And you're bidding against the most sophisticated, most profitable, most well-run competitors. Right. And so you get to play in the big leagues in exchange for posting these guarantees. We don't guarantee you a profit, but generally speaking, bond companies are not in the business of bonding contractors that don't make a profit. So we would love to help your cabinet makers grow their business by pursuing bonded work. And in a way, it's a ticket to a dance with the potential for profit once they enter.
Right. It's kind of a secret code, isn't it? If I'm able to get a bond, it means I'm in the club.
Yeah, there's a wink and a nod effect that says I'm legit. And so you'll hear, if you're talking particularly general contractors, civil contractors, folks that do a lot of bonded work, They will size each other up, so to speak, by their single and aggregate job size, which I describe as X over Y. So, hey, Dom, yeah, we do a lot of bonded work. Yeah, we're 15 over 30. What that means is I can get a $15 million single job bond and about $30 million of bonded work in the aggregate. And
wow,
that gives you a concept of size and sophistication. So, oh, well, I'm only 5 over 10. And somebody else says, well, I'm 250 over 500. I can do 250 million per job, 500 million jobs in total. And so there's a wide range. And we love serving, as you described, serving that contractor that says, I want to enter this space. I want to do it with a qualified, trusted advisor. And we work all over the country and internationally for that matter. And so we love to see folks take a progression. We were just on a call right before this with the underwriters on a 15-year client who's bidding a large federal project, and it's the largest they've ever bid. And so we had to do a bit of a sniff test to make sure that everything checked out on the qualification side so that we could issue the bond to qualify them for that project.
Yeah. It's so interesting because on the commercial side, there are so many lessons to be learned that leap you through how to win commercial jobs profitably. But once you get to a certain size, everybody else is going to be bidding to win profitably as well, right? And a lot of people that look at commercial work when you're smaller or growing, you think, oh, commercial, such tight margins.
Right.
It's not.
It's not when you know how to bid it profitably.
Right.
It's probably, in many cases, as profitable as the unbonded work that, pardon me, you didn't know about. It's just more transparent when you go up against your competitors and you realize that they're not bidding this job to go out of business. They're bidding this job to make a profit, and so are you.
To win it. Yeah. Yeah. How many of us have had a bridge built in our city that had like a $40 million cost overrun?
Yeah.
And you're like, well, that's all public knowledge. That was bid already to be profitable.
Yep.
And then they got in there and change ordered it. And
one of the secrets of public work is that many of those jobs bid at a razor thin margin, and all the money is made in the changes.
Yeah. That's I wonder if that's a secret here. I don't know. I know that in our market, people hate change orders because it's a lot of administrative work, but there are contractors out there who have that bid low and change order the heck out of the job.
Yep.
And it's just a different business approach. Everybody takes a different approach.
Yeah.
So the first time I contact you, can you tell me what that first conversation looks like for somebody who doesn't qualify? Let's say I call you and I'm not right. What are the flags I'm sending off when I
Good question. We really, first of all, do you have financial statements? And I might sit and blink until you answer that question.
I'm sorry. I thought it wasn't a rhetorical question.
Yeah. So we get a lot of calls from folks that have expressed an interest in entering this professionalized business, and they have not produced
quality,
timely financial statements, even on an internal basis, in years. They may do them once a year for their CPA or something like that, but that's an indicator. The other indicator is you have bad credit or a bankruptcy in your past. Those things play heavily into what we can get done. In my world, there's an element of art and there's an element of science. The science is checking the boxes. The art is how do I respond to the way that you have indicated on those various boxes. And so if you have bankruptcy, you have bad credit, that is a checkbox that I'm then going to have to respond to with art, not science. If you had a request in to me and you had produced internal statements, for example, meaning you use QuickBooks, which is common, but they're all on a cash basis. You've never done accrual. You've never done a WIP or a work in progress schedule. We're going to have to talk about what that means. We may need to look at your tax returns. And if you've run your tax returns to avoid income tax, legitimately so, that can often work in opposition to getting bonded, because the company needs to look profitable and solvent for the bond company to step into that level.
Of course.
So as I ask these questions, I start to understand whether or not the company has some of the foundational pieces. I'm also going to ask you about, we call it net working capital, and we analyze it a bit beyond this, but in its simplest form, short-term assets minus short-term liabilities. If that's a positive number, we have a hopeful conversation. If that's a negative number, we have an art conversation. What's going on here and how do we overcome it?
What's that number again?
Net working capital.
Net working capital.
Yes.
Okay.
And in its simplest form, it's short-term assets minus short-term liabilities. And we're going to work through these things. If you don't have an accounts receivable and accounts payable aging, okay, are you billing accurately? You may be underbilled or overbilled. So all of these things help me work from you're a contractor to you're a contractor at this level to this is what you say you want to do. How do I help you go there? Because day one may look very different than day 365 if we are on a journey together.
Hey, are you the learning chair or the president of a local or regional trade association? Well, if you are, I'm going to be offering 10 free trainings this year to trade associations. That's my way of giving back. So if you want to train your membership and talk to them more about profitability in the shop, how to run their people better, how to hire the right people, how to build systems that they can scale so they can grow this business and not have to be working in it every day, or how to be profitable, give me a call and let's figure out a training that's going to work right for your group. Just send me a text message. Actually, my cell phone number is 315-903-7853. And just say, Dom, let's talk about training. I'm glad you said that. And it opened up me reminding everybody that the reason that people listen to this show or watch it on YouTube is because we're building business people who just happen to be cabinet makers.
That's right.
Not cabinet makers who are cabinet makers. Nothing wrong with that. There's other YouTube channels for that. But this is about the business of the finished woodwork business.
And we love craftsmen, and craftsmen build great companies. But if the craftsman doesn't step into a business owner role and allow us to work with them on the fundamentals of what a company that is successful in bonded work looks like, they're going to really limit their future. And that's okay. If that's where they want to be, that's fine. But to your point, for the business owner that happens to want to run the business of XYZ construction, bonding is a huge tool in that trajectory.
Yeah. And you're talking about jobs that are 15 million.
Oh yeah.
What's the smallest bonded amount that somebody would ask for?
I think I saw one come through for $9,000 this week. So typically we have a client. In that case, we're not typically starting at $9,000 with somebody, but we have a client that has ongoing activity, and they're maybe doing a public job and the procurement officer said, hey, I need this bond. It's a $9,000 scope, but I have to have it for whatever reason. So we'll do that. Generally speaking, you're in the $250,000 to $1 million range before bonding starts becoming common. But most federally funded projects over 150,000 are going to require some sort of bond component. That is typically passed down to the states, and most states recognize something similar in terms of thresholds for bonding.
And is it only federal or, let's say government projects that require bonding? Because I thought there were some private ones as well.
Many private jobs are starting to ask for bonds, especially as we enter a transitionary period in the economy. Contractors had a lot of liquidity after COVID. They got a lot of federal money. They had a lot of pricing control. They were able to drive margin. Some of that money is burning off. Project owners realize that it's a little riskier today to hire a contractor than it was a couple years ago. And so, because old issues come back to haunt us in the future. And so decisions that were made in 2020, 2021, 2022, when cash was heavy and things seemed great, those things can come home to roost years later. And so what I'm observing in the marketplace is two things that will affect your audience. Private project owners are more often asking for bonds of their general contractor because they need they need assurance that that general contractor is going to build the job on time, on budget, per the plans and specs, and pay everybody involved, and not have a failure while they're building out this job, because it costs a lot of money to replace a contractor. So they'll pay a little more for that assurance.
It costs time.
It does. And if that contractor bid the job too favorably to the client, meaning not enough margin, and they get into it too deep and they have to walk, now they're also rebidding it at a higher number potentially for the replacement contractor. So time and rebidding is both going to be expensive. Now, what does that mean for the cabinet maker that's not a prime contractor? It means he very likely, or she, could be asked by that general contractor to bond back, which means a bond from a sub to guarantee to the general to bond their scope. And I'm seeing many bond approvals where subs over 250,000, subs over $1 million, it depends on the size of the bond program, where the general contractor is required to bond back subs over a set dollar amount, regardless of scope. And so,
really,
yes. And so a cabinet maker may, just due to the size of a nice Millworks package, may find themselves in that major subcategory due to volume. And even though they're not MEP, they're not on the critical path, they may just out of size be deemed a major sub. And so it would be just like borrowing money from a bank. The time to get approved for a bond is before you need it.
before you need it.
And so getting pre-qualified, going through the exercise, you and I are talking toward the end of a calendar year. If somebody's calendar year is also their fiscal year, it's a great time to make decisions about how to close out a year so that you're ready with good, clean financials when your CPA comes in and does work for you, that you're ready for next year, because you may want to bond work you haven't bonded in the past. And the strength of those financial statements are the cornerstone of your capacity.
I have so many questions. And I think tragically, I'm probably not even going to ask questions that my audience has. So just as a reminder, folks, leave comments here on YouTube or somehow get me the questions and I'll get them back to Matt later. Or maybe I can already tell we're going to have you back.
I would love to.
Yeah, I can already tell. But I've got 2 questions and I think they're in the wrong order. So I'll let you figure out which order we do it in. Can I just be bonded but not use it? Like, is there a carrying cost to having a bond? That's one of the questions. Yep. And then the other one is, how long does it take from I'm not a bonded company to I am a bonded company? Assuming you have timely financials, good credit, running my accounting properly, WIP reports, good net working capital, good AR age, all of that stuff. Like, how long?
Let's answer that 2 ways, because not everybody's going to have that, but they're still going to have the same problem. So as a starting point, to be bonded, meaning not that you have a license bond, which is required in many states, but you have a bond program that will allow you to procure bid bonds, payment bonds, and performance bonds, or projects where you win the contract. That's what we're talking about.
There's 4 categories of bonds now?
There's a license bond, which is sort of an administrative, in order to do business in a given state, you may very likely be required to post that, or other statutory obligations for licensing. You see it on the side of a truck, licensed, bonded, and insured. That just means they're in business. That is not the type of bond we're talking about today.
Okay.
The payment bond, I'm going to make my way back to your question, by the way. The payment bond is for free, typically. And the payment bond is a pre-qualification with teeth. So I'm sorry, did I say payment bond?
Payment bond is free and it's a pre-qualification with teeth.
I said that wrong. The bid bond. The bid bond is the first step in bonding a project. I'm so sorry.
Okay.
The bid bond is for free. The payment bond is not. The bid bond is for free. So we have to underwrite you, which goes to your question of timing. We have to underwrite you for that project as if you were going to win it. You also have to have an idea of what that project is going to go for, because we can't just give you a blank check. And then we will issue a bid bond that says usually a percentage. So it could be 5%, 10%, 15%, 20% of the bid amount is the penal sum or the damages that have to be paid out if you are awarded the project and do not get the payment performance bond. So for all intents and purposes, we underwrite the bid bond as if you have won the job.
Okay.
Then if you win the job, we have bet with the dealer, so to speak, at the bid bond level.
Yeah.
Then you call me and you say, Matt, good news, I'm low. So by the way, congratulations.
I'm low means I won
the opportunity
to lose money,
mortgage your life to do work for less than anybody else would do it. So let's just be super clear-eyed about what we're getting into here.
Yeah.
Okay.
Yeah.
Matt, I won. Great. What was the job? What was the amount? Can I see the bid list? Because if there's too big of a bid spread, we may have heartburn that we need to talk about. I mean, guys have been known to underbid a job by so much that it's cheaper to pay the penal sum of the bid bond than to actually engage in the contract because it was that much of a loser. That's extraordinarily uncommon. It can happen.
Sure.
So then I start to get paid when you buy the payment performance bond, which we call final bonds because they come together, payment performance bond. That final bond is where the meter starts to run. How long does that take, Dom? Well, you call me and I have a conversation with you, and you just need to know if you think you can get a bond. I can give you that answer pretty quickly, but I'll usually put 10 asterisks around it and say, this is not a real approval. I think you've got something to work with. I'm doing a couple of deals right now for contractors that had really challenging financials. We had to post real estate as collateral. So sometimes we have to bring other tools out of our toolbox to overcome, that's art, not science, to overcome these challenges that we're presented with. These take time. But if you bring me a really clean file, meaning your financials are in order, you've got good credit, you know how to fill out the paperwork correctly, we're talking days. It's days.
Oh, it's not that long. It's
and
not,
I don't charge anything.
But there's a lot of, and I don't charge it. Okay.
Yeah. I do a ton of free work.
That's not good for you, but
it's not because my whole business is predicated on your success. You spend money, I spend time and money getting you ready for bonding. So we want to make that as efficient as possible, but as reliable as possible because you have to run a business and make plans.
That's why you put such a tight filter on qualification because you do a lot of free work, but you have a family to raise as well.
Yes. I did not grow and sell a company because I lost money, and I don't continue that now in my new role. Yeah. And so I understand everybody's got to do something that makes sense for their family. And for some people, the overhead of bonded work isn't worth it because they have to produce financials. We may ask them to get a CPA review based on the size of the ask. They may have to introduce a new accounting method than what they've used in the past. So it does not directly cost anything to get bonded, meaning we can issue a bondability letter that tells you that you can go bid a project. It doesn't cost anything to get the bid bond generally. But then if you win, then you start spending money based on the size of the job. It's a percentage of the project.
I was going to say the cost of this, which is what everybody's salivating at right now. How much does this cost? It's a percentage of the job, but that's the pay to play format. If you're going to bid this big government job,
there's a line item for bonding. Yeah. There better be. You got to pay for it somehow, and the project owner knows that. Yeah. Now, I have clients that charge less than their bond rate because they have some challenges, but they don't want the street to see that. So they'll undercharge on the bond line item. I have some clients that actually have such strong financials that they have unbelievably low bond rates, and they put a line item in their budget that is higher than their bond rate, and they actually have a little profit center there.
Buffer.
Which helps them pay for the CPA statements and the overhead associated with managing financials. I mean, it's beautiful.
Okay, let's just stop for a second on that statement. Yeah. Because there's a lot of guys out there right now that are listening to this thinking, I don't even understand the language these guys are talking. But did you just say there's people that use money to make money inside cabinetry? And the answer to that is
yes.
Yes.
Absolutely. And we're happy for them.
So are we. I mean, we work towards those kinds. We talk, there's profit leaks in any business. There's 8 profit leaks specifically in construction. And understanding those profit leaks is an ongoing game. It's a riddle that we love to play as business coaches and as owners, going to find those opportunities because those line items look boring, but there's money in those line items. There's freedom in those tools. I love it. Thank you for bringing that up.
Absolutely. I'm glad that we can help your contractors find ways to make money on what would otherwise be an overhead item.
Are you the learning chair or president of a local or regional trade association? If you want to talk to me about providing free training for your membership, shoot me a text at 315-903-7853 and just say, let's talk about training. That's what we'll do. It comes down to, as it often does, being intentional about it. Bonding's not going to work for 99.9% of the people that watch this or listen. But for the people that it does make sense for, they're,
and it's our goal to help them understand what they're getting into with total disclosure of what it means. And if this is the business that they want to pursue, we want to help them go and win.
Let's do this because we have, for all of us, including me, this is still a new topic, and I don't claim to be an expert at all. What's the dark side of surety bonds? when it doesn't go right, what happens?
Yeah, it's a bad day. So let's assume for a minute that all of your listeners are family-owned companies where the owner is still personally guaranteeing the liabilities of the company, meaning if they get a truck loan, they're personally guaranteeing it. They get a bank loan that's not specifically tied to real estate, they're still personally guaranteeing it. They get a line of credit, they're personally guaranteeing it. The bond company also wants a personal guarantee. They're very rarely willing to take a personal guarantee that is not at least at parity with the bank and many times higher.
Oh, they want to take first position over the bank?
In terms of structure, so if husband and wife are both guaranteeing the bank loan, you're going to have a hard time convincing the surety company that only the husband is going to guarantee the surety.
Oh, I see. I see. Okay.
But you just asked a very astute question. Bond companies have, for all intents and purposes, they have the first lien on receivables associated with bonded jobs.
So they take priority over a bank?
On that job.
Really?
Mm-hmm.
Wow. I didn't think that ever happened. But
yep. Of course, now you can have, obviously there will be fights to be had, but generally speaking, the bond company steps in and has priority on the contract that they bonded. They don't have priority on the whole company. They have priority
just on the bonded work, right?
Correct. Okay. Correct. And so for that reason, if you have Millworks companies that are factoring their receivables, they probably can't factor a receivable on a bonded project for that reason.
Oh, right. Because then the factoring company can't take first position on that particular. Okay.
Correct. And I have seen more.
We haven't talked about factoring here yet. The market right now isn't really calling for it because there's so much business, but in a down market, factoring becomes a really important.
And I've seen more calls in the last few months. I can't explain it. I've seen more calls about how the bank and in many cases, the factoring company would be aligned with or at odds with the bond company.
So when we start to talk about PGs, these are really dark days. If this bond goes, if I don't perform, stuff happens. What are the stuff?
So I'm gonna paint a picture for you.
Yeah.
You've come to me and you have said, I want to enter the business of bonded construction. And I say, great. And we get you underwritten. And I present you with what's called a GIA, a general indemnity agreement, also called a general agreement of indemnity. I don't know why those two words get interchanged, but they are the same thing.
Yeah.
It is you signing your life away to the surety company. You, in exchange for the opportunity to bid what may be low bid, hard bid work, you're going to pledge your wife's wedding ring.
Oh God, you just took your ring off. For people watching this on YouTube, that was Matt's ring.
Yeah. You are going to pledge your wife's wedding ring, your kid's college fund, your house, your trucks, your toys, your bank accounts, basically anything that's not protected in a bankruptcy. You're pledging that as if this goes bad, I am going to make it right to the end. So you bid a $2 million Millworks package and you get halfway in and you realize it should have been a $2.5 million Millworks package. You don't get to just stop and rebid the work and walk off and tell them to chase you and whatever.
I can still do change orders though.
Oh, you can do change orders and we want you to.
Okay.
But to the degree that your scope was bid with, if you just missed it, the change order isn't justifiable and you just missed it.
Right.
The bond company has made a guarantee that you'll deliver that project for $2 million. And if you don't, they are going to come to you personally to recover after they make it right with your client. And so you're going to write a $500,000 check one way or the other, or you're going to end up in bankruptcy court.
Wow. Let's just let the awkward silence linger for a moment. I appreciate the fact that we were able to get this conversation to that question though, because it sounds like, okay, well, I just got to get myself bonded and I can get these big fat jobs. Well, you can, but wait, if I'm hearing you right, and I want you to test me or argue that I got it wrong. In order to get into this world, you need to have systems and processes that work. You need to have some fail safes, like your data, your numbers, and you can see when things aren't going well, so you can fix it. You need to have a team you can trust that works consistently and predictably.
Yep.
The financials in order.
And you need to have some mettle, because it's not for the faint of heart. You don't get to go to work one day and get sideways with the project owner or the GC and say, just replace me. I'm out of here. That's a bond claim. And I have had that bond claim. And it's not a fun bond claim, because the contractor just, oh, I walk off a job when it doesn't go well. No. You don't get. I don't
think those guys listen or watch this show. I really don't.
That's good.
At the very least, they don't reach out to me because they know better.
It is a bad day when that happens.
Yeah.
It's really a matter of having a well-run business. And that's why we care so much about your financials. We care about your team. Do you have a team capable of delivering this project? Do you have the money to not run out of cash before this job pays? Because that's a real risk. All of those things, we get paid to approve bonds.
Yeah.
I don't get paid to say no. Neither does my underwriter. We get paid to write profitable business, and profitable business looks like guys that buy a bond, send us a check on time, and then tell us when the job's done, ideally with a change order that increases the size of the bond, and they pay us for that as well. And we walk away never having to talk about that job again, unless it's a benchmark for the next job that we're ready to work on.
Oh, so you like it when the bridge has an overrun?
Oh, yeah.
Oh, yeah.
We love it.
Yeah. It's interesting because we look at the media differently as we mature as business people, right? When you're not a mature business person and you hear that your local hospital has just hired a CEO from outside the state or from a different province, people in Canada, and they're paying her $300,000, $400,000, let's just say $1 million. Everybody listening to that radio piece, that's ridiculous. How could somebody make $1 million? But what they don't understand when they're not sophisticated or at least looking forward is that CEO is making $100 million decisions, right?
They are.
And so when we hear these stories about there's a bridge, they're building a bridge and it's an overrun, we know as contractors what happened. They bid it at X, change orders brought it up to X times 4, and that's what the bridge was going to cost anyway.
And chances are the project owner knew it was in there, but they had to get the project
political approval,
that plan set, and they knew they were going to have overruns because they knew the plans were 70%. It just happens.
I've been part of meetings, I've been at the meeting where they spoke about bringing the Olympics to a city. And these are private meetings, so I won't even say which city and what kind of meetings, but the knowledge amongst the politicians was that having a massive event like the Olympics would be able to push through capital projects like nothing else. That's how you build transit systems, stadiums, upgrade roadways and infrastructure. It's the fastest way to do that for a city is by having a massive event.
I believe it. I hadn't thought about that, but it provides all the cover they need to spend money that they've been unable to allocate to that project.
Yeah, and fast.
Yeah.
Matt, oh my gosh. There's a bunch of people out there shaking their heads, wondering about this other world that we're talking about. And then there's a number of people going, all right, good to know. What's our next move? So maybe let me ask you, if somebody wants to reach you in this wide world and have a private conversation with their specific situation, that rhymed, wasn't supposed to. How do we find you?
I'd love to be found. I'm going to give you my email, my phone, which doesn't get text. This is a real phone that you have to pick up and dial. And I'm going to give you how to find me on LinkedIn, if that's okay.
Yeah, perfect.
Great. So my name is Matt Snowden. That's MATTSNOWDEN, Snowden. My email is msnowden, that's MSNOWDEN at mahoneygroup.com, MAHONEYGROUP.com. My office line is 623-215-1378. Again, 623-215-1378. And if you find me on LinkedIn, I'm Matt Snowden, and I've got about a dozen letters after my name.
And it's Matthew I. Snowden.
Matthew I. Snowden.
You're not the other Snowden.
I am not. I am not currently in Russia, and as far as I know, I'm not under investigation by the federal government. So I'm just a regular guy that had a pretty obscure name until somebody made headlines, and now everybody recognizes my name.
Yeah. You brought up something interesting in today's interview about work in progress WIP reports. And for those people interested, go back on the YouTube channel and find the interview I did with Kathy Svetina on WIP reports. So you can find that on YouTube. You can also find it as a podcast. Her episode was 226. And so she's a fractional CFO who specializes in those. It's the professionalization of our business. This is really what we're always marching towards. So we have other experts that come in and do this. But Matt, I got to tell you, I want to keep you on the line afterwards and figure out what the next topic is and maybe have you back next quarter to unpack another piece of this, because I'm pretty sure we're going to get feedback from people that I hadn't expected.
Thank you. I'd be honored to. We've barely scratched the surface. I'm excited about the businesses that you all are building. So thank you so much.
Yeah. Thanks, Matt. Have a great day.
See ya.